Okay, so this next video lecture is still the continuation of our Module 2, Taxation for Individual. So we are still under the income tax due computation for example number 2. So we have here the assumptions. The taxpayer is a resident alien, husband and wife with 2 dependent children. Their salary and allowances of husband arising from employment is 652,000. Living allowances 100,000 and housing benefits of 100,000 of 100% of 300,000. Teaching salary of wife is 68,000. Gross dividend income from investment in shares of stock of a domestic corporation of of 10,000 pesos. Interest of 20,000 on peso bank account. Capital gain on sale of shares of 5,000. Tax withheld by employer of husband at 118,000 and by employer of wife at 0. So husband is occupying a managerial position in the company. So they are resident alien. Okay. So for the computation, this is for the husband and the wife. So we have here the computation. So gross income, salary 1 for husband is 652, for the wife is 68,000. For the husband, he has the following allowances. 100,000 for living allowance. So the total taxable income for husband is 752,000, while for the wife it's 68,000. For the tax due, for the husband, so since his salary is 752,000, so let us look at our table. 752,000. So he falls under the the third column, third row, that is salary range of 400,000 to 800,000. So here, his income tax will be 30,000 for the first 400,000 salary, and in excess of 400,000 that is subject to 25%. Okay, so we will see. Okay, so first 400,000 is 30,000. That is fixed already. On the remainder of from the excess, okay, of 400,000. So since his total taxable income is 752,000, so 752,000 minus 400,000. So the remainder of 352,000 is subject to 25%. So that's 88,000. Okay, so therefore, the total tax of the husband is 118. 30,000 plus 88. Okay, for the wife, so the wife, his income is 68,000. So if you will look at the table, since the wife's salary do not exceed 250,000, so there is no tax due for it. Okay, because it's only 68,000. So that's why if you could see here, there is no tax for the wife. It's only for the husband. Okay, so next, we will deduct the withholding tax. Okay, so it was stated there in the assumption that the employer, the taxes withheld by the employer of the husband is 118. So since 118 was withheld, so we will deduct it. So therefore, the net tax due for the husband and wife now is 0. Okay, please take note, this tax withheld by the employer is already paid to the BIR by the employer. Okay, for the benefit of the employee. So this is what we mean by withholding tax. Okay, so the following items were not included. Okay, so if you could notice, what we include only here are the salary and the living allowances. Okay, what did we not include in the gross income? Interest peso on bank account. In this case, this is not subject to tax under the passive income. Okay, so it was not included. What is included there is your interest income from depositing in a foreign bank, I think. Okay. Capital gains on sale of shares. So in this case, this is, I think, not included because the shares were traded in the stock exchange. So that is not part of our passive income or gross income, I mean. That is, I think, part of the passive. Dividend income of 10,000 is passive income. Housing benefit of 3,000. This is a fringe benefit. Okay, so that's exempted. So the Philippine social tax contributions, if any, made by the resident alien and or his wife to the Philippine Social Security agencies shall be allowed also as deduction if there is any from their gross income in calculating their tax liabilities for the year. For individuals receiving salary and other allowances from one employer only, so the tax due is usually equal to the tax withheld. Okay, so that's why in this case, their tax due is zero because their employer already withheld their tax due. Another is, as a managerial employee, the housing benefit provided to the husband shall be subject to French benefit tax other than the income tax. So this is for French benefits tax. So that's why we did not include it in the gross income. Okay, so those are for the examples of how to compute our income tax due.